Let's move on to the other big story we're tracking for you on a Friday. Tesla driving straight into the S&P 500, the electric car company making a big U-turn in the after hours as it gets added to the index. Here we are down by 3%. This, of course, after Tesla hit yet another record high during the regular session. Karen, we've all been watching this very closely. What's your proclivity at this point when it comes to the stock? Earlier you said you would look to short it.
Yes. Thank you for bringing up a very painful trade. So I put it in order to short market on close. And then when I saw the stock trading down at maybe 3:40 p.m., trading down, right, $10 or I don't remember, 12, I thought, wow, this is not quite what I was expecting, how this was going to play out. So I canceled my short, and it ended up the market on close price was what, $6.95, I think. So that was very distressing that I did nothing. I would have covered right away. I was trading in the after hours or Monday morning. So I have no Tesla position, and yet I feel worse than I did yesterday having no Tesla position. I don't know.
Let's bring in Grace FADDIS of Grace Capital. She joins us now. We had some technical issues which we've ironed out. So Grace, we're happy to have you here join the panel. In terms of Tesla, I think amongst the broader trader panel here, you're actually bullish longer term.
I am bullish on Tesla. I think Tesla is being priced. It's expensive, okay? Everything is expensive. New York real estate is expensive. I think Tesla is being priced like a monopoly, and it reminds me of Amazon. Okay, you could have bought Amazon and you watched it go up and up and up and nobody understood. Tesla has a market cap that's larger than all the other auto companies combined. I think it's got a lot of optionality here. And the secret to Tesla, so long as they can keep borrowing money for cheap, convertible stock, convertible debt, the stock is going to work and the strategy is going to work.
And they've done that several times this year in terms of shoring up their liquidity position with various secondary offerings, et cetera, in the marketplace. Brian Kelly, at one point, was Tesla ever one of those stocks that you put in a drawer and you leave?
In fact, what a phenomenal memory you have, Melissa. In fact, it was one of those. And it's my view on this, and the reason why you put it in the top drawer of you buy the stock, you put the certificates in the top drawer, or at least the top drawer of your digital side table. Nonetheless, the point being, I think Tesla is more than a car company. I think the investors in it are thinking of it as more than a car company. I think this is a play on the decarbonization of the electric grid. The Tesla automobile and their automotive department is just kind of the proof of concept. So if you think of this much more as a venture capital deal, where all these capital raises are similar, are like a series A, B, and C, then you can see how there is much more upside to Tesla. And I think that's what the investors in Tesla are looking at.
All right, let's bring in Fast Money friend Gene Munster of Loop Ventures, who I know is watching the rebalance at the close very, very closely. I think with popcorn in hand is what you tweeted, Gene. So what'd you make of the action here? What should we expect on Monday morning?
Well, I made the action. It's funny. I tuned off a minute before the close here. I had to apologize that I was remiss at leaving the party just before the fun started. But I expect it probably moderates a little bit on Monday. But what's more important is ultimately where this company is going. And if I can frame in, I think the panel's done a great job of really highlighting the importance of the story here, which first, there is no valuation support to Tesla regarding their current business, the current revenue, $45 billion a year. But when you think about the optionality value, and I'm going to make it as simple as possible, there are 7 different verticals that they're going to be going after. Most people think of this as an EV car company, but there's autonomous taxis, robo-taxis. You have HVAC, insurance, even down to electric jets. I mean, all of this is on the roadmap. So I think Brian's venture analogy is most appropriate. And I think that regardless of what the action is on Monday, I think that this company can be a much bigger company in the years to come. And one thing I just want to, there's one thing to look at the headlines and listen to what Tesla is doing and get enamored about where the stock can go. I think there's another discipline, which is actually just measuring what's going on in the marketplace. We recently looked at the software that's available and coming available in the next year from the automotive companies across the board, and Tesla stands above. It's not even close. I won't get into the details of it, but this company has a multi-year advantage in a market that will be turned upside down over the next decade.
Gene,
Melissa,
everybody's
can I
looking at
jump
this
in?
event as a forced buying event because managers will have to buy about $85 billion worth of Tesla stocks who are benchmarked to the index. And yet this is also a forced selling event. And not many people are talking about that in terms of what do fund managers sell in order to make room for Tesla. What's your view? You cover some of the high-flying sort of consumer discretionary techie type of stocks that might fall into that category.
Yeah, there is going to be a fracturing of FANG. It's very clear what's going to happen in the next few years, and what has worked in the past won't work in the future. Companies like Apple are really well positioned in a digital transformation. I think you're going to see money inflows to this. I think this is a $200 stock in the next year plus. But then on the flip side, you look at companies like Facebook and companies like Netflix. I think that those are sources of capital for these funds. I think just other traditional businesses are sources of capital, but I think that's going to be a strong theme of this fracturing of FANG. The simple approach of owning FANG isn't going to work for outperformance. There's certainly great companies, but I think Tesla is one. You just need to own it and don't think about it. I like the idea, Brian's put it in the drawer and forget about it. But I think companies like Apple are really going to be a big beneficiary, and Facebook's got a ton of headwind coming at it in the next couple of years.
Gene, great to speak with you. Thank you. Gene Munster, Loop
Thank you.
Ventures. This change is also going to have a significant impact on the S&P 500 more broadly. Tesla is now the 6th largest company in that index, and because of Tesla, the S&P's earnings will fall 1.3% next year. Its PE ratio will rise to 22.6 times from 22.3 times. Tim, what do you think? Do you think that investors should will feel this change? The volatility of the S&P 500 would theoretically go up too because Tesla's volatility is greater.
True, but it's also a $660 billion company, and conceivably there's more of a buffer built into that. But I think the valuation on the S&P is troubling. But you add in a 1,200 trailing PE stock here. I would just add to the whole story around Tesla, which people well chronicled that I haven't been a believer here, but two events have added basically almost $400 billion of market cap, seemingly. A stock split announced on August 10th or 11th took the stock up 83% to a blow-off top at the end of August. And then the S&P inclusion announcement, I think from November 16th through the current, is another 69%. That's a 150% move in the stock based upon two technical events for a stock that has been about technicals as well. So I think you have to remember that here. And I don't care what anybody says; those are very big factors, I think, that will weigh on the stock.
All right.
Shepard Smith here. Thanks for watching CNBC on YouTube.